Hello everybody, this will be a super profitable strategy that I like to use. It's called trading swing failure patterns. I'm going to be using market Cipher B, and if you guys like this video or learn something new from it, please subscribe and like the video. It really helps me grow and make more videos like this. Anyways, the tricky part to identifying swing failure patterns is identifying them. A general rule of thumb is that you want to look for large wicks and the skinny body candles on China or Japanese candlesticks. And so the gist of it is we'll have price making higher highs, I suppose. Sorry for the bad drawings. And so this will be kind of our trend line that we drew against that. And so a swing failure pattern is when we have a nice price making higher highs, moving in a certain trend. So it'll go up, down, up, make a higher high. And then the swing failure pattern will happen when price will make that lower low and kind of go below that trend line. Let me draw that a little bit better. And then it will quickly wick up. And so drawing it with a candlestick. So we'll have our candlestick pattern right here. And then we'll have a large sort of wick. And with this, you'll quickly see price kind of move up. It'll take liquidity above a certain wick, and then it'll come back down. Now, the strategy goes over like how to trade those, and these can be very, very profitable and have a pretty high win rate. I've been using them for a while, and I'd say I win about 95% of these trades. Again, the hard part is identifying them and knowing what to look for with these trades. But as a general rule of thumb, if you go to like the 1 hour to 4 hour time frame and just look for large wicks, you will find them pretty well. Anyways, let's delete this pretty artwork that I drew. And then we're gonna look for examples of wicks that I would personally trade. And so lately there's been actually a lot of wicks. I actually took one this morning. Let me go down to the lower time frame. And so what I was looking at this morning was a wick up. Hold on, let me draw a horizontal line. Array, whatever. It was this wick up. So I was looking at this wick. I like to label them wicks and then draw in the coordinates. And so what I was looking for is price to, let me turn off this magnet tool, price to come up, grab this liquidity from this wick over here, and then kind of shoot back downwards. And as you can see, that's what happened. And so that is something to be looking for. As you can see, there was a large wick candle and then like a skinny body candle in this candle. Same with another way of looking at them is going to a higher time frame. This is a more simplified version of looking for them. I like to go to like the 4 hour time frame per se. And here you can see that we were making higher lows, and then we kind of switched over and it was going to make a higher low, but then it quickly wicked down and reversed in the other direction, kind of breaking the trend. And so with this, you can mark out this wick right here. So we're going to do that. Again, I like to name it wick and then draw out the coordinates for it. And so that is kind of something to look for when trading. Now I'm going to go over how to exactly trade these and know when price is going to reverse based off the liquidity. And so what I'm going to do is go down to the 1 minute time frame. And most of the time, usually about 85% of the time, you will see a bearish divergence on the 1 minute time frame as price is coming up and grabbing the liquidity and then quickly coming down. Not always though. Today with this one was actually a 12-minute bearish divergence, but for the sake of this video, I'm just gonna explain it and go over using the 1-minute time frame method. And so first thing you want to do is wait for price to break above this wick that you, or coordinate that you drew based on your chart. You want it to see break above it. And now with this, you want it to see it come up sort of, and then you want to see it kind of starting to come down. And when it comes down, you want to see at least one purple candle, or in most cases a red candle. You want to see that confirm, and then you want to see a bearish divergence happening on market Cipher B on the 1-minute time frame. Again, this only happens about 85% of the time, but in this case, it did happen on the 1-minute time frame. And so you want to see a bearish divergence come down and a 1-minute purple or red candle confirm, and then this will be the time you will take the trade. And so I will enter. You're going to have to market order. There's no way you can limit order. It's going to be a really, really fast move, and you have to go kind of fast. That's why I don't really post these on the Discord, but it is a very fast move. And so I would have entered a short position based on this, and then I like to put my stop loss right above that all-time high of that wick, and then I will take out half of my position at 0.5%, and then move my stop loss to my entry to reduce, make it a winning trade and reduce risk. And so with these, you can get a very, very good position on them. As you can see, this one did come down even more. But usually I like to take profits at, or take half out at 0.5% move, just so I don't lose any more money, because there are times when, especially in this big strong uptrend, that it'll come back down and then quickly come back up and stop you out. But this time you'll be in profits when you do so. So this is basically how you trade swing failure patterns. It is a very profitable way of doing it. And just to reiterate of what we went over, first you want to look for large wicky candles. I guess as a beginner, just go to the 4-hour and 1 hour and look for large wicks and mark out the wick. I like to draw in the coordinates and then write out wick, just to know of that it's a potential swing failure pattern that I am looking to trade. Next, you want to see bearish / bullish divergences forming. Again, as a rule of thumb, I like to use the 1-minute time frame, but that, again, it only works about 85% of the time. You'll see it on the 1-minute time frame. Like earlier today, it was actually the 12-minute time frame. Sometimes it'll be the 4-hour time frame. As you trade these more, you'll get advanced at them and kind of know where to be looking for. But as a beginner, I recommend starting out with the 1-minute time frame. So 1-minute time frame. And then next, as you want to see price break above / below the wick. In this case, the video I was showing you when shorting for a swing failure pattern. So you want to see a break above the wick. And so you want to kind of wait patiently. And then next, you want to see a 1-minute candle close in the red. now you want to wait for it to confirm. Meaning with this one, I would not have entered on this candle, but once this candle have turned confirmed and closed purple in this case, I would have entered on the next candle. And so that is just a general rule of thumb. And then with this, set stop loss at the high of the wick. And so with this, again, I would have set my stop loss right here. So it's about 45,439. So yeah, do that. And then take half out, take half of your position out at a 0.5% profit. And so this will kind of allow you to lock in profits because price may come up again, but with a safe bet, about 95% of the time, it will wick down to at least 0.5% profit. And so with this, you want to take out half your position, and when it reaches 0.5% profit, and then set stop loss to your entry position. And so this will allow you to have a winning trade, and if price does wick out and stop you out, you will be in profit and it will be a winning trade, therefore not losing money. And again, if you guys like this video, please give me a thumbs up. Plus, I'll leave a link to Market Cipher in the description, along with a free Discord where I post all my trades along with other crypto related ideas. Thanks. Bye.